Alrighty, folks, we got a fun subject to talk about in this video. We're going to talk about, did Kevin just celebrate too early? Obviously, I'm sure you guys probably know Kevin posted a video today. It was a fun video. I thought it was a fun video, at least. Kind of celebrating the fact that he sold out of stocks, market went down, he was able to buy back shares and save a lot of money even after taxes and those sorts of things. And so what I want to do in this video, essentially, is I want to go through kind of the wall of worry. We're going to talk about, did Kevin celebrate too early? We're going to talk about, I got a bunch of stuff kind of prepped for you guys here and prepared that we're going to go through and kind of talk about this, okay? Now, two things I want to mention here at the top, okay? The first is I still don't think Kevin gets the outrage from a lot of folks that were out there at that time. From the creator side, right, the peers of the industry, we didn't like the move mainly because we always preach, like, don't try to time the market. You don't just sell out of your entire portfolio because the market might go down short term and then try to buy back in and then sell back out and get back in. And that's the number one thing we always like caution people against. There might be certain times where you buy in stocks heavier or crypto or whatever that is, right? Might be buying heavier, might be sometimes you're laying back a little bit, but you don't make these like drastic decisions to say, I'm cashing out of everything. I'm going to get out for a month or 2 months and I'm going to get back in. And it's just like, that's more of gambling decisions, and sometimes it can work out. There's no denying that, right? If you sell out of stocks, it's a chance it could go down, right? And you could buy back for cheaper, and that's always a possibility. But to kind of do that is usually a bad thing, and usually you're going to try to keep going back to that well, right? Because if you did it once, well, shoot, you could probably do it again, right? And you could do it again. And as a creator in the space, you know, we got to understand there's definitely a lot of folks that look to us as kind of like guidance. And if we're doing those sorts of things, and then other people figure, oh, shoot, if I think the market is going to go down, I could do that same thing. And the next thing you know, they cash out of their portfolio and it doesn't work out that way, right? So I thought that was just important to address. Second thing is, he just bought back into the market recently. I don't think it's a smart move to already be celebrating, to be quite honest. I watched that video and it was entertaining and stuff, but at the same time, I was thinking to myself, I was like, there goes our little bull rally we just had here. Now we're going straight back down, man. I'm like, come on. Don't jinx the market like that. You don't do that. Like, come on. That's exactly what I saw when I was watching it. I was just thinking that. I'm like, in the stock market, I've just been doing this for such a freaking long time that I'm like, you never try to celebrate too early in any position. Wait for it to really play out. And then if you want to have a victory lap or whatever, have some victory laps then. But you got to wait for that time period to really pass where you're like, we're in the clear now, or the stocks really worked out, or the strategy really worked out. You don't go out there and celebrate just, a few days after you did it or something like that. You got to let some time pass. Let some time pass, and also make sure you've had so much success on the other side that it's no question, right? So that was kind of two things I wanted to address before. Those are more philosophy type things, I guess you can say there, okay? Now, let's get into the nitty gritty here. Let's get in the meat of this video. Let's get in the meat Kevin of this video, okay? So the wall of worry, right? The wall of worry is made up of inflation, the Fed, Russia, big tech, valuations mainly, oil, and recession fears. Okay, so let's go through each of these, and I want to give my perspective on each of these as we go. And if I think, maybe we had a premature celebration here, essentially. Okay, so first thing we got to talk about is obviously inflation. Now, good news and bad news with inflation. Inflation is still going up. We all know that. There's no discussion there, right? I will say the good news with inflation is we are close to what I feel like is going to be a deceleration in the rate of inflation, essentially, in this rapid growth. So basically, starting in about April, we had already started climbing to some insane inflation numbers, right? Well, the good news for us is we're going to start lapping those numbers year over year. So the rate of increase, in my opinion, at least is my opinion, based upon what I look at, I believe starting in kind of late springtime, that acceleration of inflation is going to start to decrease. And so although inflation is going to continue to go up, it's not going to be at the crazy percentage difference, okay? And so we've got a really tough comp in February, really tough comp in March, essentially, right? Really tough comp in April specifically. So March, April, we still got it. May, it starts to get a lot easier. And as you get into the summertime, a lot easier. And then in the fall, you got cake comparisons because it was just, inflation was already so high at that moment, right? And so that's good news. But I've got to warn people, okay? I've got to warn people because I'm always trying to look forward to like, what's the market going to think next, okay? And here's my warning I have to give it to everybody about inflation, right? Is if the rate of inflation starts to come down and we start to get close to what is called deflation, let's say in the fall time, well, the next step for the market would be, oh my gosh, we could go into deflation where companies maybe have to start dropping the price of products, right? And that would become a whole worrisome thing. That might never happen, but you know the market. The market likes to freak out over different stuff. And so don't be surprised if we did get to a place where inflation came way down in the back half of the year and we got close to deflation. And never mind if we did hit deflation, I'm telling you, I can already picture the headlines, all the company earnings are going to drop because they're going to have to start dropping price and ... And like I said, the market will always find reasons to sell off if they want to sell off. And that would be just kind of the next like reason it wanted to sell off in the back half of the year or something like that. So I just want to mention that to folks because I know that it will be on, a lot of people think that once inflation comes down, there's no worry. Well, then the next thing is, everybody will be worried about deflation. Okay. So that covers inflation. All right. Now, so the inflation is not really destroyed yet. I think that brick is going to start crumbling in about 1 to 2 months from now. It will start, and the key word is start crumbling, not like the brick's knocked over. It's just going to start crumbling that brick in 1 to 2 months from now, okay? So next brick up here is the Fed. The Fed. So the Fed is a crumbling brick now. That's the good news. They did a 0.25 percentage point move. That's not a big hike at all. Obviously, they're going to still hike, but everybody's already expecting like 7 hikes over the next year, essentially. So this, to me, is a crumbling brick. The Fed is a crumbling brick that is not nearly as scary as it was just a few months ago, for that matter, when everybody hadn't really priced in that many rate hikes, right? Plus, on top of that, some folks were thinking, man, could they raise much more aggressively? I would say they're a 0.25 percentage point move. That's not much at all. And so the Fed is a slowly crumbling brick there, okay? Russia. Let's talk about Russia. That's another big brick out there. So obviously this is still going on. How long that goes on for, no one knows. It could last weeks more, months more. It could last years more. It could last 5, 10, 15 years. You never know how long these conflicts can go for. They can go for insane amounts of time. As somebody that lives in the United States and has seen some conflicts over time, some of these can run long. Let's just put it that way, way longer than anybody anticipated. But when it comes to the market, here's the deal. The market's looking at this and they're saying, okay, this has been going on for about a month, roughly. We're kind of over it. And that's the way the market thinks. The market gets over stuff pretty darn quick. The market, it took less than 2 months for the market to get over Rona, a once in 100-year pandemic, and the market was over it within 2 months, okay? The market actually gets over stuff really quickly. And I mean really quickly. Like, it's like they care about it for a moment, maybe for a few weeks, and then it's like, choop, okay, that's a thing of the past now. So Russia, Ukraine, like I said, there's no telling. No one knows how long that will go for. But regardless, the market's just kind of over it. Unless there's some massive escalation where, Europe has to get involved and the United States has to get directly involved in some massive way. Outside of that, the market's just kind of over this. And it's just kind of like, a bunch of stuff going on over there. But the market's past that now, okay? So I would say this is a slow crumbling brick as well, okay? So basically we have a brick that will be crumbling in a couple months from now. We have a brick that is starting to crumble. We have a brick that's starting to crumble here. Big tech valuations. Let's talk about that because that's obviously been a big concern. What drives the stock market? What drives the stock market? Everybody better know the answer. Big tech. That's what drives the stock market. Look at the indexes, what those are made up of. And it's big tech. They run the whole show. NASDAQ, S&P, Dow. It's big tech, okay? They run that baby. So when it comes to big tech, here's the thing when it comes to valuations. This is forward P metrics out of your Ordini research. We're still trading rich. That's the bad news. The good news is we're coming more in line, much more in line, okay? So that's good news. But at the end of the day, if you think big tech can't still fall some more, you're sorely mistaken. This could, big tech could end up either lagging or potentially falling more. Now, that money could go somewhere else if there is any selling pressure, and let's say companies like Apple and Microsoft and those, that money could easily go toward maybe smaller big techs like Metas or Netflix or companies like that, maybe Tesla, or it could go to other companies or other ways in general. Could go to mid caps, could go to small caps. if there's a bunch of selling pressure there, that money can go somewhere else, right? So do keep in mind, we're still trading rich. This looks all the way back to 1999. And there's very few moments where we've been trading this rich on a forward P metric for large caps, just flat out. And so, yeah, good news, they're coming down. Bad news, still trading rich. And that's, unfortunate. So that's a brick that's still there. I can't really call it a crumbling brick. It's, like I said, it's getting better, but we're still up there, man. We're up at the peaks when it comes to big tech valuations, right? We know mid caps are trading insanely cheap. We know small caps are trading insanely cheap. But the big guys that really drive the indexes, they're still up there. And so that's a brick that's still intact, but it's getting closer to crumbling, okay? Next brick up here of our wall of worry, as if we didn't have enough already, oil, right? Think about this for a moment. Oil is basically a tax on consumers. If you're paying $5 a gallon at the pump instead of $3, that's just extra money out of your pocket you could have spent somewhere else, you could have saved, or you could invest in stocks or crypto or whatever it is, right? So it's basically a tax on consumers. It's also a tax on corporations, other than maybe oil and gas companies. But it's basically a tax on companies. Almost every company out there has to use some sort of transportation, right? And so if they're transporting any products around, well, shoot, guess what? That's a tax on those companies. Somebody's paying that bill at the end of the day, right? Now, we got good news and we got bad news when it comes to oil. Oil obviously dropped off a cliff from those peaks. It was, WTI got almost up to 130, and we've come down quite substantially over the past week and a day or so, okay? The bad news is very recently, over the past, let's call it 36 hours, oil's come back a lot. It's come back. And so here we are in this moment where it's like, okay, it was just kind of a fake out drop in oil, and now we're right back up. Some things to consider around oil, right? Is how rapidly are the U.S. producers going to essentially, want to get out there and frack or whatever, right? That's something to consider. And I can't tell you the answer to that. I do know there's some political things in there that maybe some of those folks aren't going to move as fast, because midterms come up in November, and maybe a little pain could get some folks out of office that maybe aren't the friends of the oil and gas industry, okay? So that's a complicated subject. What I also know is, we're about to go into springtime, which I can tell you, I'm sure with mass mandates going away and those sorts of things, I would bet you money that there's a lot of people that have trips planned, especially over the summer, that probably haven't taken a trip since 2019, right? There's a lot of families out there that really haven't done anything since like 2019, and they're dying to go somewhere. And so would bet you money that there's going to be the travel season will be big as long as these mask mandates stay away, and if places remain open this spring and the summer especially, travel is going to be busy, which is going to mean essentially there's going to be a huge demand for oil, and much more than we saw in the summer of 2021, and extremely more than we saw in the summer of 2020, and maybe even above levels we saw in summer of 2019. And so for that reason, I wouldn't say everything's good when it comes to oil price. It is very possible that oil could spike back up and stay there for at least part of the summer. So this is another one that don't celebrate too early. It's like, yeah, we came down, but baby, we could be back there in days. You know what I mean? Like, it doesn't take forever. We could be back to these prices in days. So that's that. Let's not sell. Once again, it's all about not prematurely celebrating here, man. Just calm it on down a little bit, okay? So oil is, I wouldn't call it a crumbling brick unless we go back under 100 and we stay under 100. Then it will be a crumbling brick. But for right now, it's still kind of like a little scary. Let's put it that way. Recession. So let's talk about recession, the last of the major bricks, kind of holding up the wall of worry, right? So I did a video called I Am Preparing for Recession on January 21st, 2022. And in that video, I went into just kind of how I was preparing in case we went into recession. Not that I knew for sure if we're going to go into recession or something like that. I just thought it was a possibility, and I would kind of plan accordingly for a situation that we might potentially, keyword is potentially, have a recession at some point over the year, right? And so in that video, I went into some many different important factors. By the way, if you want my free stock picking checklist, 15-part checklist, check out pinned comment down there. So in that video, I went through all these different parts on how we could potentially get ourselves into a recessionary scenario, right? Now, when it comes to this, here's what I'm seeing. I'm seeing absolutely zero signs of a recession in the real world. When I do anything, it is busy. When restaurants, I don't care, malls, trying to get a massage, it doesn't matter what the heck it is. It's busy, okay? Everywhere I go, I don't see any signs of like, wow, things are really slowing down out there. This looks bad. I don't see any of that. And maybe it's just Arizona where I'm at is booming. I'm going to go back to Vegas and we'll see what's going on in Vegas. And if I had to guess, I'm guessing things out there are probably booming as well. And so in the real world, I've got to say, I don't see any data that makes me say, oh, shoot, yeah, we're gonna go into a recession because look at, man, these places just aren't busy. I don't see any of that at all, right? Wages are increasing, which is obviously not the greatest thing for a lot of corporations, but that's a good thing for people at the end of the day. Who drives the economy? It's the people. The middle class is what drives the economy in the United States of America and really around the world. But in the United States of America, that's who's driving this thing. Okay, you got a group of folks that are in poverty. You got a group of folks that are super wealthy. Neither one of those groups can really dictate the economy in terms of spending, right? If that's all if all Apple was trying to sell to is people that are either super rich or in poverty, believe me, Apple would be a fraction of the size of the company it is today, right? Amazon, if they were only trying to sell to people that are in poverty or super rich, that would be their business would be a fraction of what it is today. Same thing with Google and Meta and all the big companies, right? The middle class is what runs things when it comes to economically. And the good news is wages are going up quite rapidly and there's a lot of jobs available, which means right now companies have to compete with each other for, to try to get, a workforce that is good, right? And try to keep workers in place. And so right now, the middle class is in the biggest position of power I've seen in my financial journey, which started in 2008. This is the best position of power I've ever seen the middle class in. How long does it last? It's a big question. But I can tell you, yes, the middle class is getting hit by inflation, but I've like how easy it is to get a job right now and get good paying jobs and companies competing for you across the board. And I see it out there in the real world all the time, like, how competitive it is for workers right now. I would tell you that's a pretty good thing. Okay. Doesn't mean it's going to last, but I will say, I kind of went into this year kind of feeling like maybe like a 50-50 recession might come in 22. Right now, I probably feel like there's about a 30-70% chance of like a 30% chance of recession and like a 70% chance of no recession in 22. So that's kind of how I feel about that. That's just something that obviously, is just going to have to play out over the year. So in my opinion, I think Kevin's getting maybe a little too excited too fast, but I understand when the world kind of feels against you, you're ready to just, something goes right, you're ready to just, hey, look at me, I did right, I did it good, man. And I can sympathize with that as obviously being a YouTuber and being in the spotlight and those sorts of things. But that's my 2 cents on it. I think there's some crumbling bricks. I think there's some bricks that are on the verge of crumbling. That's good news for the market, but it's one of those things. Let's hold our horses. Hold your horses a little bit. Let's not get too excited too fast. We got to wait for some things to play out here before we go celebrating or something like that. Obviously, I'm invested super heavy in the market, like the most heavy I'm the most heavy I've been invested since December 2018. So if there's one guy that's rooting for this market to just continue to go up, it's this dude right here. But with that being said, I never, what do they say? Count your eggs in the basket before you got them or something. I don't know. That's some expression. Okay. So anyways, guys, hope you enjoyed this video. Let me know your opinion in the comment section as always. Make sure to subscribe to the channel if you're not already and check out the pinned comment for my free checklist. Much love and have a great day.